Welcome to Founders Unplugged, hosted by Greg McCallum. Long-form, honest conversations with founders and entrepreneurs from around the world. This is part 2 of this episode. Be sure to check out part 1 if you haven't already. Link in the description.
Okay, and we're back for part 2. I'm here with Nick. If you haven't already, I would highly recommend checking out part 1, which came out a few days ago, or not. It's up to you. I'm not in charge of what you do, so you do whatever you want. But it would be useful because then you'll have some context on who Nick is and what Nick does before we carry on the conversation and kind of pick up where we left off. So, the end of the last part, you were mentioning something very interesting then, that sort of talking about the state of the market. And the kind of ecosystem as a whole. So what did you mean by that? What are some of your observations there, I guess?
Yeah, as I said, we have this approach which combines technology, capital, and infrastructure. So the technology part, I think, is the most important. That's why we build this ABRT AI lab, where we leverage AI and data to transform the venture industry, right? So how to make cool and viral AI data apps which help the market to be more transparent, to be better. So that's comes to the like a problem statement, right? So what is going on in the venture market? What is the current momentum? We have a very interesting thing, two major trends actually. One is these exponential technologies, right? So the number of startups is growing exponentially. We have all these new AI, blockchain, right? All these new emerging areas like quantum computing as well, right? And then I think we'll see like a continued waves of innovation because even when we started working on a kind of web apps before 2005, 2007, 2008, e-commerce boom, right? Then you have all these productivity apps and software like Miro and others. And it still goes on. I mean, it never stops. So right now we have AI in place, right? And we have all kinds of AI agents working, solving most of the tasks. And then after that, as AI is in place, then I think we'll have a major breakthrough in digital health, right? And the drug discovery, as those I mentioned in a previous episode. And that's exponential technologies, definitely. So number of startups is growing. And then we also have another big trend, which is exponential capital, because there's a great McKinsey report. It's called the private markets or private capital under management. Before COVID, we had like 5 trillion private capital under management. Right now, it's over 10 trillion already. So it's doubled. And it's also growing exponentially. So it's very interesting. So we have more and more startup founders, more and more people have that calling, responding to the challenges, building great companies. We have more and more wealth being created as a result of that. In the middle, we still have the traditional venture capital industry, which in a sense still operates exactly the same way it operated when, well, like I think 68, 69, like asset management company here, Arthur Rock, the first cohort of venture capitalists here in the Bay Area. The same long venture capital cycle, investing, divesting period. There is some degree of innovation happening, but the VC market is still kind of the bottleneck. So how to connect the world of startups and the world of private investors? That's a big question. How to kind of solve that bottleneck, VC bottleneck issue. That's two major trends: abundance of capital, right? The technology abundance and the abundance of capital. And the idea was very simple. Okay, let's explore. Let's build some pioneering AI data apps that would bring in more transparency to the market. That would allow like intelligent capital allocation engine that would help you as a private investor to have a better risk return profile, right? To invest in startups with a low, as I said in the previous episode, the startup house case. Family offices, they want to do something in tech because tech is cool. Everyone is doing something in tech right now. But how can I do something in tech and still avoid the risk of losing my money? That's the main kind of state of mind that the private investors have. And since private capital under management is growing exponentially, they can try to experiment, give some chunk of dedicate, right, budget some chunks of their capital to go into tech, but they have to have good infrastructure, good ways to do it, good products. So that would allow less risky and more liquid venture capital investments. And software, I think, is the key to solve that VC bottleneck issue. Because why is the key? Because software is eating the world, right? So all other industries, you can take digital health. So the health industry is being completely transformed. Biotech is being completely transformed. Fintech, all cool neobanks, Monzo in the UK, Revolut, right? Wise, a great example of a company, right? That has an amazing product. Even stock market. If you look at the public side, actually, there's also a trend that private markets, they a little bit behind the public markets. So all the innovation which is going on in the financial markets first happens on the public side, and then after that goes into private markets. So pretty much, if we observe what actually happened with the stock market, first it was very disorganized, but then algo trading strategies came. It's great reference from Ray Dalio called The Principles, where he explains the history, how they came up with algo trading strategies, and that completely transformed the whole industry of public markets and trading. But if we look at the VC market, it's still pretty unstructured. That's why, for example, VC score is useful because it brings up the foundational structure behind the decision making, the so-called data factor, how investors would rely on the data factor to make data-driven investment decisions. So all other industries, right? Digital health, fintech, capital markets, they've been transformed with the software and quantitative trading, right, tools. But the VC market is yet to go digital. It's still in the early days. People are experimenting, a lot of cool experiments. For example, Keith Tier, he is a co-founder of Crunchbase, right? He is building a company, also like algorithmic capital allocation engine called Signaling here in Palo Alto. Great guy, very smart, putting together some basic, foundational things, how to discover future unicorns, looking at the kind of Series B, Series C companies. And our friends from NFX, they have built a couple of products, for example, NFX Signal and Brieflink. So I was curious, what could be the tool to facilitate seed and Series A, so for early stage companies, how we can create a similar, in a sense, Bloomberg terminal for startups for pre-seed, seed, Series A companies, for early stage. And that's related also to the venture capital cycle. If we put together the whole venture capital cycle, you first start sourcing deals, right? Then you run analytics on them, then you transact, you put them into portfolio, value-added program, how you can grow the companies, help entrepreneurs to increase the value of the company, and then exit. Look at those inefficiencies across the venture capital cycle. Almost each stage in the venture capital cycle has its own gaps. So VC Score addresses the gap related to the sourcing, how you can save 75-80% of your time and resources by discovering the kind of deal discovery engine, right? To discover great companies and spend less time on it. That's the gap in the beginning of the venture capital cycle. But then you can also address the value-added programs, how you can uplift the entrepreneurs, right? That's one of the other concepts, the so-called startup booster. We have this fractional advisory. So you have to put in the right resources. You have to have the motivation system in place and help the companies, entrepreneurs, to grow the value of their companies. That's an example of how to address inefficiency in the kind of portfolio management stage, right? How to add value to the company is the startup booster. And for example, for VC Score, we had before creating a product, we conceptualized it for quite some time. So for VC Score, we had a codename Ripometer. It's the tool which measures the ripeness of a startup. So pretty much the same we have right now, the codename Startup Booster, the thing which helps build value, boost the value creation in a startup company. And so each stage in a venture capital cycle has its own gaps. The VC bottleneck, if we drill down to it, what the VC bottleneck is, you see lots of inefficiencies in the venture capital cycle. And basically, our AI lab makes like pioneering AI data apps to address those inefficiencies, those gaps in the venture capital cycle. And the goal is very simple: to just go ahead, help more startups, win more data, because the more data you win, the more defensibility you get, the more accurate, the more precise algos, algorithms are working, the more precise the benchmarking process is. And then we can think about the monetization. So for me, there's a lot of ways to monetize, because basically the market itself is a capital market. It deals with the capital. So how to monetize on the capital markets? It's very simple. Asset under management. That's the most obvious model. AUM, asset under management. The better deals we can discover, right? The more data we collect about the startups, the better products we build. So great products and data, this kind of enable asset under management model to go to. So right now, there's like whole, as I said, private capital under management over 10 trillion, annual venture capital, like hundreds of billions. It used to be 300 plus billion, like annual volume, venture capital volume. So this markets are capital rich, and the deal discovery, the more precise it is, the more accurate, and the better the products work, the more successful we could be on asset under management, AUM side. Advising, bringing entrepreneurs to the VCs, co-investing with them. So that's, I think, very good momentum to be in the venture market, because startups growing exponentially, wealth, exponential tech, exponential wealth is growing exponentially. VC is still not fully transformed compared to other industries. So that's why I think in the next decade, it's not super fast, because all capital markets are very conservative. If you look at how many years it took for the stock market to go through the transformation, it was like a couple decades at least, maybe 3 decades. Right now it's a bit faster, maybe 5 to 10 years, but still I would expect midterm. So our midterm strategy is to focus on building the pioneering AI data apps to be able to, bring in more transparency, more either similar to stock market. I think the VC market in the next decade will become more transparent, more democratized, more unbiased also, because right now it's still a lot of bias in the decision-making process. And also more accessible to risk averse and so-called non-VC club investors. Because if you look at the Sand Hill Road, so it's our neighbors here in Menlo Park, Sand Hill Road, all the top VC firms are on the Sand Hill Road. They all are oversubscribed. They are just not, if you want to invest in a VC, in the best films, you have no chance to. So you have to actually go chase them, take my money, and they won't take, because they're all oversubscribed. So that's why I say non-VC club investors. So those who want to do something in Czech, want to do it with a kind of risk-free or low risk. Yeah, it's kind of building a new asset class on higher than stock market returns with a lower risk. That is the main ask that the private investors have. And I think if we can enable with this pioneering AI data apps, then we can basically form or shape the new asset class. All these tools, like S&P 500, right? There's a product on a public site, which shows like index of the best companies on the public market. The same kind of index of early stage startups backed by leading venture capital firms. It's a great product. As I said, our portfolio has 30 plus investments. IRR is good. The return on investment was almost 44%, 43.99. So those top venture capital firms perform really well. And if we're actually able to build this index product for index of early stage startups backed by leading venture capital firms, that would be S&P 500 of private market. That's a great way to monetize data apps. The more data, the more accurate, the more precise the apps work, the better they are on the monetization side. So,
and I suppose it can attract new money too, right? Because if there's probably a lot of people on the sidelines that are very nervous about the prospects of investing their capital into something like the startup ecosystem, into venture, because they've maybe been told by their accountant for so long that it's very complicated or it's very risky, and so they might invest into more traditional things, stocks, shares, property, etc. But actually formalizing this structure, making it more transparent, more democratized, it may attract this new money, and maybe more high net worth individuals as a result, especially the new wave of high net worth individuals that are coming in, who are more technologically savvy anyway, right? I mean, you see a lot of young millionaires, young billionaires, whatever, who are now coming into the scene. They would expect there to be this level of rigor and technology in place for something, and if there isn't,
Sure.
they probably just won't consider putting their money there. They'll go with something which is a bit more advanced, like
True.
Coinbase or whatever, right? I mean, that's where they're going to put their money.
Hi, a friendly reminder to share this episode with your network, like and subscribe. And if you are feeling really supportive, please consider reviewing the show on the podcast platform of your choice. It all really helps support what we do. Thank you. Now back to the show.
Yeah, so the main question is how we can create as a brand new, risk-free, right, or low-risk VC asset class for non-VC club investors. That's actually the big deal. And so far, we have, as I said, great examples of technologies, like technology enablers, allowing us to do it. And I think there's a lot of innovation ahead of us, especially with the AI and data. We can do way more compared to what we could do before, even like 5 years ago. And there's also all expertise in place as well. So all the top VCs, they have their data in place, insights, and many of them are publicly available. Andreessen Horowitz has the so-called growth metrics guide, which has all the Andreessen Horowitz benchmarks publicly available. So if we can leverage the knowledge of the top venture capital firms, and our apps like VC Score is using data, insights, and expertise of these leading investors, I think that that gives market these tools, right, that make best VC expertise available to a broader audience. It's a good way to democratize the market. And you said about the capitalizing. It's exactly what we have on our website. If you open ABRT website, it says capitalizing innovation economy. So how we can bring in more capital to the markets, because as I said, startups are growing exponentially. Founders need more capital to build great products, great companies. And we have that surplus of capital right now. Just need to find the way. It's like a tube, right?
It's interesting because you've said that a couple of times, and you're the first person to tell me that, at least in this last 12 months. Like, the general story is that the well is running dry, that people are running scared. Is it because of where you are in the States? I mean, because in Europe, I think there's a very different perception of that. Is it just that because you're looking at it from the viewpoint of the US market, which has always been a lot more bullish, a lot more prepared to take more riskier investments? Is that why you're saying that?
I can share a McKinsey report in the comments on the YouTube when you post it. There's a specific report about the capital markets, and it's all calculated. It's all math. So more and more people exit, more and more. So entrepreneurship drives or creates more wealth. That's why the more companies are started, the more exits we have, the more capital is being created. In new asset classes like crypto is a completely new asset class that emerged out of nowhere. So I think this trend for wealth creation, another big trend, a lot of exits, they drive more and more wealth for example, for early employees, for founders, or the businesses which generate a lot of profit. They become a cash cows for family offices. Actually, the whole trend with the family office thing emerged in the past maybe 10 years. We heard nothing about family offices, but now it's a whole industry. Wealth management is growing. Family office as a new normal, right, is here. That means more and more wealthy individuals are there. More and more. I'm not talking about institutional side. I'm not talking about the venture capital market. I'm talking about the private capital markets. So that's the one metric that I mentioned: private capital under management. So we definitely have the trend for exponential wealth. The more and more wealth is being created. I think COVID triggered that because lots of liquidity was created on the market, and that liquidity actually empowered the wealthiest people to become so rich are getting more rich and poor are getting poor. But if we are looking at the rich segment, like I mean, like the wealthiest people almost double their net worth, like 300 something billion right now. I think Elon is like number one in the list. So that actually happens with most, like everyone, like HNWI, high net worth individual, right? They kind of double their wealth. And that's a major trend. So the more new millionaires are being created every day, more and more capital is available. And then another thing is about that calling. So we actually have a big problem. Very smart, wealthy people are looking for the next big thing, what to do next. That's actually a very big trend. So people are no longer working because they should, but they're working because they have that inner calling to live world better as they found it. And that's another big another big idea, how we can engage, how we can attract the smartest people to, and also they bring in the capital. So that's how we actually work with the team here in ABRT. So all my founders, co-founders are very experienced guys who built already companies, who sold their companies. So my product co-founder Alexei, he has built viral AI app called Prisma. Yeah, he exited. He's like serial entrepreneur based in London. He made several exits, and he is the genius mind behind the VC Score app. So that's a great example. And he did it not because he needed money, because he had that inner calling. He raised capital for his startups many times. He said, it's such a pain to raise capital. I have this idea. Please, let's build it. He was like taking me. And then my house, the startup house co-founder, Azamat, he has built a network of hotels in Central Asia. So I was looking for someone with the experience in the real sector, in the real estate sector. And that's his main kind of calling and the motivation. And he was also teaching entrepreneurship in the university. So he had both. he had a passion for entrepreneurship education and passion for building a network, a chain of hotels. So it's exactly about the startup house, I thought. And basically the main idea to how you can attract the smartest guys, how you can kind of religiously convert them to the world of genius paradigm, to build the infrastructure, to build the cool apps. So that's I think my main job is right now. So kind of build a talent platform which allows or helps my co-founders to become more successful by creating stunning products, by creating great businesses, and then we can all collectively help more and more people and live the world in a better way than we found it. So that's pretty much like having amazing advisors, having serial entrepreneurs focusing and kind of operating businesses. That's my main job, I think, right? It's kind of, if you ask me, I do have expertise in analytics and markets, but my main job is to be evangelist for this bright future of the world of genius. And then the more people buy into it, collectively, magically, we're going to make it.
It's funny, isn't it? The skill sets for being an effective leader or CEO are very, very similar to the skill sets probably needed to be a cult leader. Right?
Yeah.
They're probably very similar.
CEO is more on the operational side. I don't think I'm a good CEO. No, I think I'm good at analytics. That's right. People love when I start analyzing companies, they love it. I probably when I create this specific ask about a particular co-founder always comes. But that's the thing we talked about in the first part. You start with internally, with inner process, and then people would manifest. You people, the right people would come in.
But that's a really important skill set. Is someone who can get the best out of people, right? Essentially, and get them to rally towards the same, to see the same vision that you see, to tell that story, to get them to rally behind it. This is why I'm so bullish on sales as a skill set, right? I talk about it a lot. It's what my startup is all about, as you know. it's this, baked in of me spending 15, 20 odd years in sales and marketing, both as an individual contributor and then as a sales leader, then as a commercial lead, and working as an executive in leading commercial functions. And like something I'm always talking about constantly, and people are probably bored of me talking about it at this point, is the fact that founders, I think, should really fundamentally make that a number one priority for them to learn those fundamental sales skills, because it's not, the word sales is quite scary, but actually when you break it down, it refers, at least to me, my definition of it is very high level communication skills and very high level presentation skills. That's basically what we're talking about. It's being very, very good at communicating, holding conversation. So high emotional intelligence, good levels of empathy, and then written, verbal, body language communication, and then of course the ability to tell a good story, right? So being a good storyteller, to tell a good narrative.
Yeah. Vision is very important, and narrative, how you communicate the vision, is also very important. One of the startups here in the startup house is able to create narrative. They use AI to create narratives. You tell them which speaker you want to use, like Simon Sinek or Steve Jobs or someone else, and then they would take your pitch, take your vision, and create a narrative as with a digital twin of that speaker. I think, cool. We'll have more and more tools like that to help startups, to help founders.
I mean, that's cool, but I would argue that that's a skill set that also the founders need to have, because you're going to need to sell to someone eventually yourself, right? Whether that's an investor, prospective customer, or just your internal team, like you said, like about building that team around you, like finding the co-founders, finding those early staff, building. You need to be able to rally people around your vision, and to do that, you need to be very good at communicating that, and also not just communicating it once, but again and again and again, and then changing, pivoting, adapting that story, that narrative. And that's a skill that is important to master as early as possible.
AI. Since the GPT emerged, I take something and I have a kind of prompt. Please rewrite this as a native speaker, making it easier to read and understand.
Right. Okay.
I start learning from GPT. The same. So I ran a couple pitches yesterday through this app, the narrative app. I like the Steve Jobs app. The Steve Jobs style, and I thought, this I could take, and also that I could take. Oh, good. So actually, AI is able to empower that to continuous learning.
It's augmenting as opposed to replacing, which we talk about a lot in this space, right? Yeah, useful tool. It's interesting as well what you said there about being like a non-native English speaker. So like someone, as an immigrant, like I work with a lot. I've had a lot of immigrant founders on the show, and I work with a lot. And one thing I see time and time again that we end up having to work on or talk about is this piece, right? Is this the communication piece? Because of it, at least for them, and they may be correct about this actually, native English speaking founders usually have a distinct advantage when it comes to selling, when it comes to pitching for investment and so on, because they're speaking in their native language, whereas someone who is speaking English as a second or third language, you're having to translate everything in your head. You're having to put a lot more time into practicing and rehearsing and putting it together. What might take 5 minutes for someone to just email back an investor, answering a question, might take a non-native English speaker hours sometimes to speak, to really truly understand. So like this is a really it's an interesting thing, and something that I'm really passionate about.
Where AI helps. That's exactly where AI helps. AI helps to be a better communicator, and it's not just using AI like blindly. No, it's about learning from AI.
Yeah, don't just copy it.
Internalizing that, and then using it as if it is your own language, and then it uplift the level of communication ultimately. So that's I think a great advantage of LLMs.
Yeah.
And all this
leveling the playing field a little bit for sure. Yeah, absolutely. Yeah, it's interesting. The ways that these technologies now can be used to create a bit more of a level playing field is important. But it's something I'm very passionate about because both my parents are immigrants, and I grew up in a house full of foreign exchange students, and so for me, like it's something that I've been thinking about a lot over the last couple of years. Like just the amount of incredible founders that I meet that have immigrated here from around the world, whether it's to London or again, moving to up your part of the world, to pursue their dream of becoming a founder. And it's always this thing that comes back to where it's like it takes them twice as long and they have to work twice as hard because there's that barrier. There's that initial barrier that they need to overcome. I mean, they need to learn the language first. Like there are some that
But
I spoke
that's
to
also
that
fun too, in a sense, going into the unknown. And
yeah. But obviously for some it's more difficult than others, you know, and so, but it's just interesting. It's just a very interesting dynamic. I think about immigrant founders a lot and what we can do more to support them. But it's good to see that there's a lot of stuff out there and more stuff dedicated specifically to immigrant founders too. But you mentioned about the team then. So how did you come to you know, obviously your VC's been around for a while. So what, 18 something odd years now you guys have been operational?
Right.
So
exactly.
so
let's
are you still with this? Sorry, go ahead.
Yeah, let's finish up the VC score thing, and then we can.
Sure. Yeah, go ahead. Sorry.
So yeah, like 18 plus years, and we thought, okay, how we can take, because different VCs have different investment criteria. Like Insight, for example, right? They have at least 1 million quarterly revenues, and for example, there's a great startup I found, this edtech startup. By the way, UK-based ML science, and bring it to Insight and say, oh, it's a great company. And in terms of a quarterly criteria, it meets our revenue expectations. But then how we can get to the LTV CAC of 3.2 or more. So the company has a little bit more, you know, strength on the scalability side. So each particular VC has its own expectations based on the business metrics, based on the traction. And Insight, for example, right, as I said, expansion stage, quarterly revenue, good scalability, LTV CAC ratios, like some examples of what they're looking for. For Andreessen Horowitz, so many things are just publicly available. So Guide to Growth Metrics, that's very useful resource with the benchmarks from Andreessen Horowitz blogs. Their partner, like Andrew Chen, writes a blog and then he explains, look, I want on the engagement side for consumer apps, daily active users to monthly active users, DAU to MAU ratio to be 20% or more, and the world class is like 50%. So they all kind of share, some of them even publicly share insights. Sequoia, for example, has great blogs about retention, sustainable product growth, NFX, right? And I think, like, again, like so many different VCs share their knowledge, and then how we can leverage the knowledge of the top VCs, how we can embed like all these apps, make them use data, use insights and expertise of the leading investors, and as we're able to do it, that's kind of proven model. As I said, we got a cohort of startups, 30 plus investments, IRR almost 24%, so it's good. With the leading VCs, we can achieve very good financial returns. And that's the whole idea about the VC score. Take all those benchmarks from the top investors, put them into the database, make sure there is like a reference point for the market. And onboarding is quite simple. So we have different benchmarks, like from VCs. We have VC application form. Startups fill in 3-5 minutes. Have this. Some of our advisors, they say, oh, it's pretty much like HR application process. You apply for a new position, and then it's a kind of applicant tracking system for VCs. The same as we have applicant tracking system for the hiring process, the same as the applicant tracking system for VCs. And from the application standpoint, NFX has a great product, Brieflink. YC has application form, so we just use it as a reference. We used benchmarking from Andreessen Horowitz as a reference to create a percentile-based benchmarks based on the metrics. And that's basically it. It's very, very simple tool that helps you as a founder within 3-5 minutes get your percentile-based scorecard and benchmarks for each particular metrics.
If you are enjoying this episode and want to support the show, please like, subscribe with notifications turned on, and let us know your thoughts and opinions in the comments below. This lets YouTube know we are doing something right. Back to the show.
And another advantage that I have is way easier to train analysts right now because we have all the structured data. App collects all the structured data, and right now analysts are able to do very quick, the so-called investment audit document, top strength, top weaknesses. But I think we can even right now experimenting with the prompts. So AI can help build this AI rendered investment audit document highlighting top strengths and top weaknesses for startup. And so basically that's it. That's a so-called data factor, which saves time, a lot of time for founders. It saves time for raising capital. For VCs, it saves time for screening, for sourcing deals, the deal discovery thing. And it also ensures clarity. So immediately as an investor, I see the KPIs of a startup. I see where they're good or where they kind of lagging behind the KPIs. And it gives very clear roadmap for raising capital, for investing in a particular startup. And that clarity in numbers, it also enables a better communication with mentors, communication with investors, and becomes a cultural norm on the market, ultimately to democratize access to capital, to capitalize the innovation economy, as we just chatted in the previous blog.
So let me ask you something that is going to be a very, very self-serving question, a very pointed question. And I have ulterior motives, but I'll explain why in a minute. So you said that, I mean, you've mentioned this a couple of times, and it's also common knowledge. Traction revenue is a very good indicator for VCs, for any investor really, as to whether or not it's a worthwhile investment. It's a de-risking factor, et cetera, et cetera. We all kind of know that, and you've mentioned it a couple of times. So let me ask you this. How important is that compared to the potential for a founding team to make revenue? So, because if that isn't something that is currently able to be determined, really, right? So, say if it's very early on, they've only just started selling, that could look like that would be a negative, right? That would be less points on your system. But if you could capture what their potential to make revenue was, would that be weighted?
I think it more correlates with the startup you connected us with. Remember, they do this assessment, the team assessment thing, well,
that's psychometric. We do what I'm talking about, which is potential to make money. That's what we do. So that's why I'm asking you.
I think.
I'm curious to know what your thoughts.
Chatted. They gave us a demo. Right now, we're going through the psychometric assessment.
Cool.
I think it's
awesome.
cool. I loved it. I love the concept. I think there are a number of systems how we can calculate the team score, their potential to make revenue. Which one is correct? I don't know. I want to try different. One of the founders, actually, the spiritual path, one of the founders did team score through the, how they call it? They say we have a methodology which measures commitment of co-founders to each other. If it's a strong commitment, then they will pivot, but they will stay together as a team, no matter what. So that's another way to look at how to measure founders' commitment. And so that's, I think, a very important thing, especially for early stage, because when there is like zero metrics, we can only answer to a question where you need to go. So some of the startups which come to us right now, they're just starting, they have a prototype or MVP stage. So they have close to zero metrics. But then they're still curious what metrics we should have in order to be able to be attractive for the VCs to raise capital. This is basically, this is our point A, this is our point B, this is where we need to go. And that helps them focus on the KPIs, which KPIs the company has to achieve to become fundable.
And I think it's important because not every startup can get to a point where they can be generating revenue, and for early on, and they obviously the ideal scenario would be do what you can, bootstrap, generate revenue before you go and seek investment. But for a lot of specific industries, that's not a viable option. And so there has to be other ways of measuring the potential for revenue and the potential for growth for those particular cases, whether that's deep tech, biotech, medtech, things like that. You want to know, well, is there that skill set? So if we give these guys our money, they're going to turn this into more money. Because that isn't a valid, a very good way of doing it. Or it might be just, it's, I don't know, a solution that needs to be sold into enterprise and they need to hire the expertise or people with the connections to make that happen. You know what I mean? There are various factors. So,
that's why I think potentially if we can collaborate, there is a lot of synergies on the psychometric side and what we do on the traction side. Because we still have no answer to the question how we can benchmark the potential of the team. I know a few answers, but it's not the answer. So
Yeah.
for traction, we kind of found it. For team, I think we can just do some pilots, collaborate, explore.
Well, like I said,
and
that's
then-
why it was a very selfish question, and to our conversations that we're having separately. But yeah, I think it's important. Yeah, there's that three elements, isn't there? That's kind of like the overall analysis of what's happening now, the kind of the psychological makeup, I guess, of the individuals, how they
True.
work together, and all of
Founders'
that.
commitment.
Founders' commitment, exactly. And then there's the skill set. It's like, well, what is the skill set there, and what is missing? Because I think that's also interesting and important too. It's not just what they have, but what they don't have, because that's useful not just from an investor's perspective, but also from the startup's perspective. Like, they want to know that just as much as the investors do. Because if everyone's on the same page and everyone can see the same thing transparently, you go, okay, well, we know what we're investing in. We know that you're going to need help here, and we know that you're going to need this here. And likewise, the founders can do the same thing. Go, okay, well, we know where to allocate capital first. We know we either need to hire here, or we need to get training here, or mentorship here. So like, it just brings everyone onto the same page.
And we also want to make sure that the best startups get more attention from the VCs, which is also very important. Right now, a lot of noise, and especially when I think like VCs are swamped with in numerous pitch decks. One of our VCs said, "Look, I have like 1,000 something pitch decks, and I didn't answer those emails. Can you just go check on them, make sure like parse those pitch decks, pre-fill their profiles in the VC score." Reach out to them, so founders would then claim those profiles, confirm the key metrics, and then as a VC, I would know the top 10 startups to talk to out of 1,000. That would save a lot of my time. That's, I think, another thing. So one thing is helping founders streamline the fundraising process and make it easier. And the other thing is helping VCs, not to get swamped in the pitch decks, because right now they're kind of trying to find investment opportunity and a swamped and a kind of lots of noise on the market. How you can
and the noise is and the noise also goes both ways. I mean, startup founders hear so much or nothing at all when it comes to feedback and advice and so on too, and to have it just a little bit more specific and honest and direct is key. If it can just say, guys, this is what you're missing, like you said with VC score, it does that. It gives you a very clear route to say, this is what your score is, this is what you need to work on. Like, the more we can do with that, the better. The more direct, strategic kind of information we can give founders to go, not ready yet, come back, but you go away and do these things. Whereas, like you said, VCs can't do that all the time. There's always a conversation. Why don't VCs give feedback and so on? It's like, they're too busy. Number one, they're too busy. And number two, when they do, they usually get not very nice responses back. So there's no incentive for them to do it. Like, you got to remember that, so it's super interesting. Listen, man, we're coming towards the end.
We can have just one last point remaining. Let's chat the team. The team.
That's actually, that's what I wanted to ask you about, the team.
Because we kind of covered all the rest. The team, again, I think the main trend is that more and more very experienced, wealthy people are here looking for challenges. That's kind of also related to the exponential wealth. There's a lot of business angels. For example, last year I talked to over like 500 business angels. That actually was one of the things which inspired me to build the VC score. And I mean, like, lots of capital, lots of expertise available. And I was started thinking how I can apply that world of genius concept, putting together the smartest people, directing their creative power to co-create this better environment for entrepreneurs together. Some would do the house thing, the startup house, and pioneering data apps, new products, and kind of launch, like investment vehicles as well. And kind of applying the world of genius concept to building and growing my team. And that's also my environment, which helps me become more productive, more efficient. So that's basically the main kind of foundation for having the A+, the star team on board. And as I said, my kind of product co-founder is a serial entrepreneur. My startup house co-founder has lots of wealth of expertise, also a serial entrepreneur in the kind of hotel things and entrepreneurship education. And my co-founders in ABRT are amazing absolutely bright guys. ABRT is Andrei Baranov and Ratner Timashov is serial entrepreneurs, exited, great relationships. So you can have like amazing advisors and serial entrepreneurs working together. That would lead to building kind of talent platform where people would bring in capital, bring in expertise, deploy that capital, making their own investment decisions. So I'm not like looking for investors. I'm more like looking for hands-on partners who would come with the capital on board, deploy the capital, and then would lead us to the next level. So that's exactly the same concept. We're now talking about the VC score, getting a marketing partner on board, someone who successful business angel, exited serial entrepreneur with consumer marketing experience, who knows how to bring the apps viral because the product is in place, the product we build, and we have a great product guy, product co-founder is here. So right now there's someone who's focusing on the marketing side. That's my current ask, basically, how to bring in more, an additional team member, focusing on the user acquisition, organic traffic growth, spreading the word out, consumer marketing. So that's a great example of the talent platform. And then all the rest is here. The product is ready. It works. We're kind of fine-tuning it, fixing bugs. We're kind of experimenting right now, doing lots of integrations. So yeah, everything is ready. And I also have investors lined up, ready to deploy the capital and the good deals. So basically right now, the only missing part right now is the kind of promotion, marketing, user acquisition part. And that's an example of how talent platform, ABRT is a talent platform, works day to day. And as we find great people, like with the startup house, as soon as we kind of partnered with Azamat, we kind of exponential growth. Pretty much the same concept is the VC score. We have a product in place, and
half the battle is just understanding what it is you're missing, right? That's the key. Understanding where are our gaps.
I say forming the ask, forming or defining the ask.
Right.
What I'm asking for, understanding the ask.
Yeah, because you got to understand it first, right? So, like you said, if for you now it's someone with that experience to take the platform to the consumer, that's the next step. You need to spend some time really analyzing what you have first before you can make that conclusion, right? Otherwise, it would be very easy to assume, oh, we can do this, and you do that for months and months.
I clearly understand we can't.
Right, and that's good. Yeah, but that comes with experience because of there's a certain amount of what's the word I'm looking for? Arrogance, I guess, that I think early stage founders, first time entrepreneurs have, where you think you can do everything, and
until you try, you don't know. You first have to try to fail, and then say, "Oh, I know nothing about marketing. I thought I know a lot."
Yeah. Exactly. And so, you need to go through that sometimes to realize how little you know, and then go, okay, fine, I'm not good at that, or I don't know how to do that. I'm going to get other people to do it. And that's a good position to be in. Sometimes in the beginning, sometimes you need to do everything, but as soon as you're able to get other people in, get them in.
I think it's a great ending.
That's it's a good thing to end on. Yeah. And also I'd say, look, your startup houses sound like fun. So if you've got a spare bunk bed for me in the new year, I might. Good.
I do.
All right, cool. I'll have to.
Shoot me an email. We organize everything. Yeah.
All right.
We actually have a private rooms like for families, startup families.
Okay, now we're talking. We're gonna talk. Especially if you can get me in front of some of your investors. I'm down. Let's do it.
Sounds good.
All right, man. Cool. Well, look, I'm gonna let you go. Thank you so much.
Thank you, Greg.
Thanks for putting up with me being late. Yeah. Always awesome to catch up with you, man. And we'll be catching up again soon anyway to talk about all the things we're talking about, including that private room you just mentioned. And have to make sure it's dog friendly. So we'll be catching up again soon. And man, it's always a pleasure. And I'm really amazed by what you guys are doing. VC Score looks like it's really positioned to change the game. So yeah, you've got me shouting about it over here already. So
thank you.
So yeah, good luck with it all. Keep up the great work.
Thank you so much. Thank you.
See you soon. Take care.
Bye.
Thank you for listening and/or watching. Please like and subscribe. Or if you are listening via podcasting service and want to show your support, consider rating or leaving a review. It really helps. See you next week.